Welcome to the inaugural episode of The Nest Show, the podcast that brings you insights into the crypto market, trading and investment experiences, and what we're looking forward to as we navigate the space together. In this episode, you'll hear a brief introduction to the podcast, our takes on capital flows in the market at large, and fundamental triggers that are potentially driving crypto into its next stage of development and adoption. Later on, you'll hear from Sponge on his experience with automated trading strategies on various timeframes, as well as Birb's feedback on automation resulting from his extensive community outreach. And finally, you'll get a few tips that each of us have for traders in the market at any level. And thank you for listening. I'm your host, Ben, joined by Sponge and our fearless leader, Crypto Birb, who you will also hear referred to as Adrian. What the Nest Show is. This is a podcast brought to you by the Birb Nest community, an independent crypto and forex-centered trading community built to sharpen each other in order to capture opportunities in the market while protecting capital and positions along the way. What this is not: trading advice. We are not financial advisors and encourage you to seek the counsel of a licensed financial analyst before making any financial decisions. Who I am. I'm Ben. I specialize in fundamental analysis of the market. I've been in the crypto market since early 2017 and linked up with these guys just about a year ago. Moving on over to Sponge.
Hi guys, I'm Sponge. I've been in the market a similar amount of time. I specialize in technical analysis content, and I've been working with Birb for a short time, producing analysis for his group.
And Adrian.
Yo guys. My name is Adrian, or Crypto Birb. What can I say? I'm running a Twitter, right? I'm the founder and CEO of the Birb Nest brand that is going to rock all the way 2020. And this is my pleasure to be pretty much like the very first guest of our brand new project, brand new podcast, The Nest Show, and I'm extremely excited for that.
As we all are. And folks, just to let you know, if you're in our community, you'll know just how active we are there, but you have no idea how much work we put in the behind the scenes action. So what these three voices that you're hearing represent are countless hours of work, of collaboration, both within the community and with the other administrators of the community, and countless outreach to other brands and initiative, mainly centered on the crypto space. So that's where Adrian and I have been working together mainly. And, we're really excited about the experience that we've had in the market so far, and also this latest activity in the market. So jumping right into it, over the last couple of days, the markets are green. It's like the rainy season. And, of course, the large caps have been leading the space, but pretty much across the board, we've got green. And Adrian, would you like to speak to any of the capital movements that we've seen? Obviously, these crypto markets are still very nascent and largely unregulated. So it can be a very exciting space. But as far as emerging trends and, significant capital influx, is there anything you're looking at for Bitcoin dominance or other kind of capital flows within the market?
Yeah, sure. So that's pretty much certain. When it comes to as much as I am myself in the greatest part, the technical analyst, right? I tend to put a lot of pressure, a lot of focus on from my side for the intermarket analysis too, right? Apart from obvious fundamentals and sentiment part, that's pretty much the intermarket part that pretty much drives the whole capital around, right? Because one of the main, let's say, rules for between any financial markets is that the capital flows, right? It rarely ever stays in the same place for a long time, simply. And that is why to monitor what's going on within the cryptocurrency market, we need to monitor also what's outside it, right? And for this very reason, I think recent fundamental, events, right, such as, for example, launching backed futures and options, like for the exchange, like back in September, right, or the upcoming mining, the upcoming halving, right, or halving this is two versions pretty much to halving or halving, as I said, two options to express the same even for Bitcoin. And recent fundamental factors, I think they could have added pretty much like a lot of reason to what we are seeing right now in the market, to the reason that that everything is pretty much like green, right? With Bitcoin being on the top, leading the whole crew, the whole bunch of cryptocurrencies. And I think, when it comes to circling back to the intermarket part, like just look what recently, happened with Bitcoin's price when there were pretty much like instabilities with regard to U.S. pretty much like politics and economic pretty much connections, right? And that was the perfect, I think, example of how intermarket analysis works and how intermarket phenomena work pretty much. Simply capital, flows out from stocks, right, or flows out from some other financial markets, right? It flows between them to actually reach out to Bitcoin in the end, in this very case, right? And the moment that Trump pretty much announced, launching the missiles for Iran, right? And that was the very same time. That was the very same hour, I would say, that Bitcoin pretty much exploded, right? That it printed nice big move, a nice big change in the price that we have not seen for a longer time, because we've been before we would have been pretty much downtrending for about 6 months, right? So that was definitely a new period for Bitcoin, and I'm myself considering that to be a bullish factor, that Bitcoin can be considered and can work with the help of such fundamental events, as I said, of launching the backed options or the backed futures regulated by ECC. It can be considered a store of value, right? It can be considered a store of value in a similar way that gold is. And this is what is, I think, very bullish fundamental factor for it, because it didn't show us to confirm that once, but actually twice within this 2019, okay, when there was Trump announcing China war back in May, right? But it was back in May, so that was the moment that Bitcoin noted extremely big influx of capital at one day, and not surprisingly, that was almost the very same hour, as I said, right? So that was the very same hour that the announcement came in from Trump that there would be tariffs posed on China deal, let's say. So again, there's some repetitive formula, right? Whenever there is some inconsistencies or imbalance in U.S. market.
To pick back up on some of the things that Adrian was mentioning, some of the points fundamentally that I'm really interested in are coming out of China. And obviously the Iran and Saudi infighting and how those affect oil flows and crude are instrumental to the market. But one of the factors that we see affecting crypto adoption actually started some decades ago with the inception of credit cards in the US and the lack of credit card servicers in China. And that caused for China to have a great deal of underserved or unbanked, where it was very easy for the internet age in the US to integrate credit card servicers into web payment portals. China hasn't had that luxury. So they have kind of by necessity been ahead of the game for alternative web pay services through Alibaba and Alipay, et cetera. And now, of course, with Facebook somewhat pushing China's hand with their crypto project, they obviously didn't want to lose out on that kind of crypto arms race. So we've really seen them escalate their initiatives and their timetables, for their, state issued cryptocurrency. Are there any other global fundamental triggers that you're looking for? Sponge, if you don't mind taking that one.
Sure, yeah. I mean, there's certainly one that I think a lot of people are talking about at the moment, which is Craig Wright. Obviously, as we know, he's been in court and he's been trying to prove himself as Satoshi. According to a recent court filing, I say recent, it was actually yesterday, a court filing, a third party has provided the necessary information to unlock his encrypted files, which seemingly is referencing the intermediary with the private keys necessary to unlock the 9.5 billion Bitcoin trove that he's got. Birb, how do you feel that will affect the market fundamentally and technically in the next few weeks?
Throughout the history, and then since the very launch of the Bitcoin in 2008, there have been many posers. There have been many guys that kind of like try to present themselves as Satoshis, right? Like even when I was attending back in 2-3 months ago in Vegas, it was November. There was on the conference, on WCC conference, World Crypto Conference. There was another guy, this long hair dude. I don't even remember his name. I believe he was German, and he was acting and presenting himself, on stage, etc., as a Satoshi, right, as a Bitcoin co-founder. So I think in this industry, like everybody kind of like wants to pretend to be the owner or founder of Bitcoin, right? Which is obviously like nonsense. But they would still try to build some marketing perhaps around it, like to find some business right on it. But when it comes to strictly Craig Wright, I think I think this is mainly what's been happening with BSV, right? This BSV recently. Now that's been pumping like crazy, right? In the anticipation of pretty much the community claiming for this type of Bitcoin to be the real Bitcoin, right? I personally I lose my mind whenever I see or spot anything like that on the internet that people claim it to be the real Bitcoin, etc. Again, nonsense, right? And blindly following crowd, I would say. But with regard to the price for Bitcoin, I don't think First of all, it is the most risky financial market like in the existence right now. So first rule to measure and to control any risk in this extremely volatile and risky market is to use stop losses, right? So if you don't use stop losses, you're getting lost anyways. But if you even if something happens terrible from the Craig side, if you get your stop losses in place, then you're secured, right? You're protected over it. So I think it may increase some volatility, right? It may imply some volatility, especially when there is like some official statement from courts coming, right? But aside from that, outside it, I don't think it would put a lot of change to the Bitcoin price.
Yeah, and I think it just goes to show how truly nascent this market is when you have a character like Craig Wright who would be laughed off of pretty much any stage in traditional financial markets. He has really kind of held headlines ransom in crypto. And, I think that he talks a great game in terms of, threatening that the court ruling will crash the price of Bitcoin because he has to liquidate half of the holdings in order to, pay XYZ estate. And, I think that it makes for some, interesting sound bites. But I think that, really what we've seen on display isn't the work of, Satoshi-esque genius, but more so the work of a grifter. But I think that, again, it just goes to show just how young the market truly is. Another factor that I'm looking at in terms of global capital flows are, of course, the equity markets and legacy markets. And here in the U.S., the Fed has continued to pump a vast amount of capital into these markets, and one could suppose that they're propping them up, but they're, of course, as in any market cycle, will be a definitive correction. And looking at Bitcoin, crypto, and other traditional stores of value, especially precious metals, we see that comparatively speaking, platinum, gold are underbought compared to equities and their legacy counterparts. So I think that, of course, while the game continues to be hot in the global markets, we'll see capital try to squeeze as much profit there as they can. But what we're starting to see are what I would call some very favorable conditions where you have the kind of capital movements in crypto that capture global attention and says, hey, this market is still viable. And even though there are, characters like Craig Wright and other, suspicious activity, like in solar news today, which we'll cover in just a little bit, which would have, traditional markets kind of scratching their heads. It goes without saying that there's tremendous opportunity here. And I think that, wherever there's overnight, 25, 50%, 100% markups, it really captures the imagination of the retail investor. And, I think that we can all speak to that because I don't think there's a speaker or listener of this podcast who would be in the markets if our imagination wasn't captured by both, the promise of crypto as well as, financial gain in a speculative manner. So at any rate, Craig Wright is he's a character. I'll give him that much. But I would, if I were a betting man, I would take very hefty odds that he will never unlock any of Satoshi's wallets, and will continue eating out on that notion for as long as he can until he's no longer even a footnote in the development of the markets. So I'd like to transition into a next part of the show, which is to discuss some of the daily trading habits of our experts here. So Sponge, you've been using various algorithmic trading and automated trading techniques in the market for some time, and as myself and many others could probably speak to, the notion that an automatic strategy can be successful in this market to capture all that volatility is really attractive. But of course, with as much as volatility can earn you, it can also bite you. So what has your experience been on the automated front, and what are you looking at moving forward?
Well, so I started automating, or at least looking into automation, sort of early last year, and in that time, I wrote several indicators, and then eventually came to the point where I've just started automating trading. And if anything, I found it to be hands down the most beneficial thing I've done for my trading in years. There's several reasons for it. I mean, just the main factor in it that helps you out as a trader is the fact that you can trade without emotions now. So the algorithm, it doesn't care what you think. It doesn't care, if you had enough sleep that day, how your diet's been, all those things, and it will just make trades on your behalf. And it's as long as you've back tested it and it's reliable, you can rely on it. The first sort of hurdle I had in terms of algorithmic trading was trusting the algorithm, which sounds ridiculous because it's I know how it works, it's set up and it's back tested, but you always have that certain fear just at the start. But after a few weeks and a few test weeks on BitMEX there, trading a few things, trades started rolling in successfully, and it's just been a wonder all year. It's freed up so much of my time, which is why I've been able to come along and work with Birb, which has been great as well. Yeah, it's great. It's just like having an edge, but not having to actually work.
Yeah, Sponge, I'm really happy to hear that. And for our listeners, how are you specifically automating your strategies? Like, are you automating through through a private platform or through a Telegram-enabled bot? Like a Cornix or some such. How are you going about that?
So right now, I'm actually automating them through TradingView. I get alerts sent to a bot, which I'm not sponsored for saying this, but I'll shill it anyway because it's excellent. It's a bot called DewBot. A lot of people use something called AutoView to automate their TradingView strategies. I've heard a few sort of varying reviews on it, so I thought I'd search out something better. And someone I know recommended DewBot to me, and it's just been excellent. It hasn't missed a beat since I started. And so the way it works is that I set my alerts on my TradingView indicators that I've made, and they get sent over to DewBot, and that will execute the trades for me through API. I am currently working on or working with a Python developer who's going to be setting up a brand new application that I'll be able to automate trading through, which should be quite a promising prospect for the next couple of years. I'm not sure how long it will be till that's out, but that's the next step certainly.
Right on. And as far as your automated strategies go, there's so many traders, especially in a market as volatile as crypto, who feel compelled to capture as much volatility as they can. Trading on the minute charts, or through another platform, trading on even smaller time frames, like almost like they would binary options. With your strategies, did you test, shorter time frames, or are you mainly on like a 4-hour or daily? Like, are you capturing large swings, or are you scalping, or does it depend from vehicle to vehicle? How do you go about that?
So I'm basically most of my trading is midterm swings. So I'll trade stuff like the 4-hour or I've got one algorithm that's working on the 2-hour. It's currently long at the moment from 7336, and it hasn't closed yet, and we're up 20% from that one, which is great. But I have dabbled with lower time frames. I did work on some 1 minute stuff, and I've worked on time frames around that. But personally, I find it's better to stay away from the high frequency trading, because there's already enough guys smashing that out of the park, and I don't think I could compete in those waters. So I have the lowest time frame algorithm I have now is a 15-minute one, which is highly successful in itself, and I just sort of stay away from all the low time frames. It's just not worth getting too involved, and you get a lot of money taken away from you in fees if you're trading sort of 1 minute time frames. So personally, it's not for me.
That's true, and that was going to be my my follow-up question as to whether or not in your higher time frame work, if you always seek to enter as a maker or as a taker, where you would pay the fees to the exchange.
Yeah, so I tend to go with limit orders. Try and be a maker if I can. Occasionally, if the algorithm's getting choked at the exchange, it will just market order straight in. So I might sometimes pay higher fees, but because of the way that I'm trading, because I'm trying to trade longer swings, I tend to be in a trade for an average of 30 days or 31 days, I believe is the average trade at the moment. I tend to catch sort of fairly large swings, so I'm not too worried about the fees personally. I'd say that's more a concern for the lower time frame people.
And Adrian, you do a lot of private coaching and one-on-ones with your clients. And in addition to that, you also interact voraciously on Twitter with some of the people who have reached out to you. How many would you say peak interest on automated trading, or have shared horror stories about being turned around on the market. What's the general take there?
Well, that is a very good question, to be honest. Because any technical analysis book, if you go and open that, and like apart from the fact that there are some basic principles that are similar to every technical analysis theory, let's say, in every book almost you would find a chapter that would be solely about automated trading as the most suggested way to go, right? And this is to filter off pretty much emotional aspects, right? Because this is what pretty much defines us as people to be traders, right? That we are being emotional, and that is our greatest. Us being emotional is our greatest enemy. So we end up being our greatest enemies at the same time when it comes to trading. So any technical book would go and suggest automated trading as the ultimate solution to go and follow. And so now there is a way, and there is the whole process of pretty much reaching the point that you have constructed satisfying automated trading system, right? Or algorithm. There are the whole banking industry, right, is cooperating strongly with AI industry to merge forces and to actually just go and implement artificial intelligence into financial markets, and then tracking and recording the financial markets and automating actual trades, right? Because one thing is trading with a couple of $100, right? That if you lose, I don't know, you lose like $50 or $100, or even if you lose the damn whole $500, whatever, then it's still incomparable for within the banking industry when you lose on a bad bet, let's say millions or even billions, right? So that is extremely important to have a good automated system in place that will be 100% reliable and self-improving based on the AI. That's been pretty much trending within the banking industry, I think. And when it comes to Twitter community solely, I think as any other aspect in this world, it would always be statistically proven to be the bell curve, to be the normal distribution pattern. And which means that there would always be the people who are underperforming, there would always be people who are overperforming, and there would always be the people who are pretty much oscillating around the average when it comes to their performance in any field, including trading. Which means that vast majority of trading people would be of average education, of average skills, of average experience, etc., right? So there would always be only a few people on the market that would be professionals, that would be trading for years, that would be very experienced and knowing, having all the greatest strategies in place, using very often, as I said, the actual automated systems. And the whole thing, what I love about TA, what I love about technical analysis, and how it beautifully wraps up with all the other financial market analysis aspects, is that the crowd is always blind, right? There's always this herd instinct that people would follow. Like if some strong character, if some strong let's say authority shows them the direction, they will go and follow that blindly, right? So the whole thing is that you need to know where to kind of when to follow the crowd, when to actually just unfollow the crowd, if you know what I mean, right? And so there would always be why am I saying all that? Twitter is mainly consisting of those average experience, average features people, right? They would always come there to find and build perhaps some knowledge, to find some educational resources, following, for example, people like me, right? That we are developing the Nest brand pretty much to go and deliver huge amounts, huge tons of free content that people would go and simply take and enjoy to learn, right? And this way, by the admiration, by following those as I call it, like opinion makers at times, they I would say they are making their own they're making the decisions based on opinions of the people whom who are being followed, right? So if I, for example, go and tweet out some setup, right, there is like quite some chance that there would be a couple of guys that would literally blindly follow me, right, as much as any other guy, or even more some OGs on the market, right? And so knowing that average, not the vast majorities of average skills, average experience, and all that, etc., the majority would not be interested in automated trading. They would go and try to, despite being extremely exhausted after regular 9 to 5, taking care of their families, very often drowning in debts, right? They are bearing huge emotional pressure, and choose still to go and trade themselves, right? Instead of actually relying, as Sponge said, on the automated system, which is not true case either. But all in all, people with only like a few, I would say, this is the minority. And I would say this is the minority that is actually just overperforming the market on like the average market, right? And they are overperforming, like, because they use the automated trading systems too. So I would say that vast majority would not go and use automated trading systems. Firstly, because they might not be aware of existence for the such systems. Secondly, they would be too emotional on that, right? They would be very, I would say, what? Now, there are two emotional states of like in human nature that are mainly driving the whole market back and forwards. And that would be the greed, and that would be the fear, right? And these are the greatest enemies. These are the greatest drivers for any kind of trader. And simply, people are too greedy or too much. They have too much fear to use the systems, right? They are too greedy. They get too complacent. They won't use the automated system because they are too good for that, right? And if they fear, they would not pretty much either go to the automated trading system, because the whole fate is in their hands, right? They will not really want to rely on automated trading system. So it's all emotional game in this part.
Yeah, it's truly fascinating, because you bring up a number of great points there. One, say for instance, the community on Twitter can be so reactive, and a marketplace where vying for attention becomes an arms race of stimulation. People require greater and greater stimulus in order to react to something, or in order for something to grab their attention. And I think that people should take a hard look at their strategy and realize that at the end of the day, whether or not a system is performed on your behalf, you're still in an automated system, you yourself as a trader, because as an operating system, as a human, you've programmed yourself to react to certain stimulus and respond to certain stimulus, and require certain thresholds to meet triggers and engage reaction. And it's important to understand your own mechanism in order to be successful in the market. And I feel like what traditional automated traders do really well is identify their parameters for a successful trade, and they log and they backtest, and they look at the information that will over the course of time put them into that 10%, which is making 90% of the returns on the market, as opposed to being the 90% of traders who inevitably lose. All right, guys, as we close out our episode, I'd like to take a moment to thank our listeners for all being here, and give Sponge and Birb the opportunity to share hot takes or anything that they're looking forward to in the market or tips that they have for traders. And I'll start by saying, traders out there in crypto, remember we're in this for the long haul, and the more time that we have the opportunity to accumulate positions and capitalize on those positions, the better. So in terms of trading, keep it simple and keep your eye on the prize, and do not, whatever you do not get washed out by overextended positions. Sponge, would you like to add to that?
Yeah, I'd say my hottest tip I could possibly give anyone listening, particularly inexperienced traders, there's just three things. I'd say you need to learn to be patient, you need to wait for confirmation, and you need to manage your risk. The market's not going anywhere. I think a lot of people, as you said earlier, you were talking about stimuli. I think a lot of new traders and even some experienced traders will find themselves zooming into very low time frames and just looking for things that aren't necessarily there. It's very easy to get yourself down to the 5-minute chart or the 15-minute chart, see a spike and just go, wow, oh my God, I've got to get into this. I've got to get into this. And you go in, you don't manage the risk, you get a bad entry, and then you zoom out and you realize that was a 0.5% move or something. And I think a lot of people should sort of try to sort of self-regulate their trading and their risk management. And just, most traders, particularly as you said, the 90% that lose money would do far better to watch the weekly charts and the high time frames and just steer clear of actually trading themselves. Just try and catch the momentum on the longer runs.
Amen. And Adrian, on to you.
I think personally, the most important feature, characterizing the successful traders, is having the strategy in place, right? Having the strategy that stems from your actual reasoning, which means that, let's say, you will never be a good trader. You will never be a good trader if you can afford time-wise only, let's say, mid-time frame trading, right, or position trading on the longer periods, and you, for some reason, in the name of some stereotypes that, let's say, if you're not scalping on the 100 leverage times 100 leverage, 1 minute degenerate candles, then you cannot really dare to call yourself a trader, and that is obviously nonsense, right? If you go and watch the most successful traders, I don't know, be it Warren Buffett, do you really think he would ever go and sit in his basement closed 24 hours per day to go and watch daily or on the daily basis 1 minute charts, 1 minute candles to go and play? Oh shit, now I'm going long. Damn, now I'm going short, right? Okay, here I got stopped. There is no way, right? The less moves, the fewer moves you actually take or perform, the better for you, because you have more time to think about it. You have more time to simply, to put your time aside to another matters, right? To another ways and another streams to actually manage your money and build your wealth, not only in trading, right? I mean, there are many ways you can. There are many ways, we can make money. It's not necessarily only financial markets. You can do any type of business. So one of the main rules of any portfolio management is pretty much diversification, right? So we go and diversify into different markets, not only financial markets, or even within the financial markets. You don't really want to spend your whole life within the most volatile market in the world, being stressed out whole time. But you would go and, when you have built some capital, you would go and distribute it amongst different markets, for example, real estate, right? Or commodities or Forex, etc., etc. So knowing yourself, what you can afford with your resources, what you can afford with your human resources too, what I mean. This is what I mean. And knowing yourself deeply, in terms of your strengths and your weaknesses, and boosting your strengths to help you reach your success, and pretty much mitigating the impact of your weaknesses, right? This is like what I think leads you in the quickest and the fastest way to reach your success. And the success, like for any, this is actually the another tip apart from knowing yourself. I think it's crucial and hugely important to know definitions of words that you are using. I think, like, if you go and research, I think like 90% of people would have no idea about, how to define things that they, pretty much like have any contact with. So let's say if they go and touch trading, so they firstly need to understand and realize what the trading is, right? How can you be a successful trader not knowing what trading is, not really being able to define it at any time and point? So being able to, in the same way, to define your strengths and weaknesses, right? To define what your success is, right? Because the whole situation is in building wealth is that you define your input situation, you define your set of input data that you're like having at this point in time. And when you know what you want to achieve, your output data, right? You know where you want to be in some time and place. Now, what experience you want to build, what you are trying to achieve. Only then you can arrange the process that will take you from the input situation to the output. And this process is a strategy, right? And only by being able to define things and matters that you're dealing with in a good way and manner, only then can you really be successful.
Amen. And finally, guys, for our listeners out there who would like to connect with you on Twitter or otherwise, I'm just going to give you an opportunity to identify yourselves and your handles.
You can find me on Twitter. It's just at SpongeCoinBob. Yeah, give me a follow and we'll talk.
That's a good show, bro. That's a good show.
That's my best go at it.
That's a good show. That's a good show. So my tag would be crypto_Birb, like BRB, not with the D at the end, right? That's the unique part. Definitely, I feel extreme pleasure and honor to be working with Ben and with Sponge. Like, they're awesome guys. And definitely go and make sure to give them all a follow. This extremely talented beast. And what else? Like, before we actually just hop off, I think we need to really put some information that majority of most important parts that you can go and actually just absorb for free to find in the pieces of content that I made that we produce within the Nest is one of the projects is the Birb Nest Bulletin, right? So this is a monthly issue project. We are producing that monthly. This is completely free of cost. You just go and read it.
And of course, I am at Benjamin T1717, or you may know my handle as Tales from the Crypto. I want to thank you and, of course, our speakers, Sponge and Crypto Birb Adrian, for joining us in our first episode of the Nest Show. If you've liked what you've heard today, subscribe to our podcast and find our landing page at thebirbnest.com. We have a vibrant Discord community we welcome you to join at thebirbnest.com/Discord. We also offer an extensive free bulletin on emerging market trends, exclusive undervalued gem reports, and in-depth expert technical and fundamental analysis at thebirbnest.com/bulletin. Again, that's thebirbnest.com/bulletin. We always appreciate engagement from our community and are happy to incorporate tips and topics from our listeners. This podcast is brought to you by the Birb Nest. Thank you, and trade on.